Morning and happy Tuesday. How are you today? Please give me some okay that you can hear me. Thank you, Rikos. That's exactly what I asked for. Okay. All right, good. Thank you very much, guys. Thank you very much. So let's begin. We are on Tuesday, one day before the FOMC meetings. That to happen tomorrow. As we discussed yesterday, in such situation, very good probability that the market will slow down before that, right? And we'll be looking for some clearer direction after. We set some direction, some of the pairs started to move, and some others are coming to interesting levels. So let's follow up. I'm, of course, referring to our report. Okay, that's the report I'm talking about, of course. Okay, so you get it right after the live room, so that's what we have. Few updates accordingly. So let's start with the majors. Euro dollar, our view is bullish. Short term, we don't know how that could develop further. It doesn't have any convergences on a daily chart. It doesn't have three-wave pushes yet. So there is a chance that we will see one more low. Yeah, definitely a possibility. Meanwhile, as long as we don't have any opposite signs, the euro dollar is bullish. So for us, it's a buy. And basically, this is the place where we got our convergence and divergence, right? Bullish hidden divergence and the trend continuation. So the idea is drops, looking for the buys as long as this low hold. I would expect the euro dollar to make some kind of two waves correction before it will design anything else for longer run. So that's one. Pound dollar on this pair we are bearish, which means daily is bullish divergence. We require for our chart to be double wave correction. So this is exactly what we want to see. 1, 2, and sells. As for now, this is only one leg developing, providing some kind of short-term opportunities by making higher highs now. That could make something like that. Two waves correction, definitely. Another possibility is it turns to be some kind of a range. And after that, we are for sells. But now, with making the correction and creating new highs, there is a chance that after drop, we're gonna see the second leg. Attention required here. Short-term rallies are acceptable due to the fact that daily is in a cycle, right? And there is one more thing to pay attention to, and that's the fact that we do build up here a false break. Okay, so maybe, after all that, it will turn to be double false break, go above this, start going for a longer wave to the upside. As for now, we do accept short-term buys due to the new additional part here of false breaks and higher highs. We do carry the false break of the daily. Since yesterday, it managed to close above, create the higher highs, and this is exactly where short-term buys become acceptable. Okay, for long-term, though, we don't yet have any higher highs on the daily. We do not yet have any trend line broken on the daily. We do not yet have three wave pushes, right? The alternative 1, 2, 3, 1, 2 breakout. None of that is yet in play. Therefore, the acceptable long after drops is yet for the short term. Okay. If there is any question, just let me know, guys, and so I can reply later. Okay. So that's the one we start to follow. We have the same idea with the Aussie dollar and the Kiwi dollar, basically the same. Aussie Kiwi starts to look interesting for our expected second wave to the downside. The way it forms, there is a good chance we will face a movement towards 61.8 or all the way to the 100. And keep in mind, we have the big trend line here that fits in the 61.8, and we have the broken range level, and that fits in the 100 here. So that's where the two levels starts to be interesting. I expect there the divergence to form. Meanwhile, our short-term plan for the Aussie Kiwi was and remains bearish. Okay, so we are in a short-term sell here. Next ones we were following Euro CAD and Kiwi CAD, right? The CAD pairs in general, bullish. So far, so good. We are approaching to the first target zone, the 38.2 of this cycle. Next one is right here, right? This is 2, this is 1. Right? It's the place to make some cash out. From there, we have to see who is taking the control, bulls or bears. There's a good chance, because the weekly cycle is still bearish and the daily might go and form here a bearish hidden divergence. 4 hour must be 2 waves, and a 4 hour is building up the 2 waves right now. How do we validate the 4 hour chart correction? If this is the 2 legs we have, 1 and 2, right? And there is divergence developing in between them. Each of these legs must be a cycle by itself. If you can validate that, you have yourself a possible sell opportunity. Okay, so the questions you need to ask yourself is the 1 hour chart a cycle? Do I have divergence in between? And do I have the 2 candles rule in play inside all that craziness? If the answer is yes, that means you are good to start looking for the sells. If the answer is no, that means you are waiting until the conditions come correct. And why do I say that? Because if you take a look, for example, on Aussie Kiwi, which is also short-term rallies acceptable with the daily bullish divergence, right, on the moving averages. Here comes the question. So can we go and sell this one? We do have the divergence. We do have the 2 candles rule in play. That looks good. All right, let's go and make and sell. And here is the question you always need to ask yourself. Is the 1 hour chart, that was the first leg, that's the second leg. The first leg is a cycle. The second leg, right, looks like that, but there is one problem with this situation. There is no divergence. Therefore, the second leg is yet not a cycle. Where it could become to be a cycle? Here. That's a possible scenario, right? This is a clearance zone. After clearing this area, that's exactly where we can start getting the next portion of the cells. You see the difference, guys? That's the question you need to ask yourself, right? So basically go step by step. And this is the whole idea. Daily bullish divergence, 4 hour must be corrective cycle. Corrective cycle could be in 2 variations, 2 waves retrace or a range. As for now, it forms 2 waves. Does it look good? 2 candles rule in play. That's the filters. Divergence is developing. That's another confirmation. Great. And each of these legs must be a cycle by itself on the lower time frame, right? Because if the 4 hour is 2 waves cycle with divergence by itself. That means each leg should be a cycle by itself on the lower time frame, confirmed by divergence. Once it is, that's the time to start looking for the trade. Okay, very straightforward. And that's the questions you need to ask yourself. If you don't get the answer clear for that situation, don't force. Don't force. That means the market is not ready. As simple as that. Pound yen, another pair that we are looking for sells because we don't have any divergence in play. It does have something that reminds a triple cycle, but it doesn't have the divergence, right? In all these situations. That's why we expect the continuation. So 4 hour must be move up in two waves or a bearish hidden divergence, right? And then we can start looking for the sell. Is it a bearish hidden divergence? The answer is not yet, right? Can we see a bearish hidden here? The answer is not yet. Do we have two waves retrace? The answer is not yet. Do we have a range? The answer is again not yet. So the pound yen, we need to make sure one of these scenarios comes in play. Range, two waves, or a bearish hidden divergence. Bearish hidden divergence is acceptable here for one reason. This reason is because the daily has no signs against. Therefore, we have the continuation down as expectation. 4 hour must fit with 1 hour. As for now, they don't. Once they will, we can start looking for the sells. Okay, so for us, rallies, and we are after sells. Once 4 hour and 1 hour both become bearish. Okay, remember that. Now, one of the ideas was yesterday to get a range breakout. Never happened, so we don't have here enough reasons for the sell. Okay, guys, you see the questions I ask myself? That's the roadmap. Every single step, every single decision you take, stop for a second, ask yourself the question. It starts with the current time frame. Current time frame is the one that designed you for the whole roadmap, right? On the lower time frame, you need to validate. You validate with measurement and with filters. Filters to two filters, two candles and divergences. And then you need to validate yourself a setup. That means the next lower time frame should be ready to go. Once it's ready to go, the higher time frames don't have any thing against you. That's where you go and trade it. Like the pound Aussie. Yesterday, we were talking about looking for buys. Short terms, right? That was the last divergence on the daily. 4 hour was last divergence right here. And the problem was that at the moment of the breakout of this trend line, right? Attempt to breakout, what did we have? Bearish hidden divergence. So that's the situation where the three time frames don't fit inside, right? They don't fit in. And what does that mean? We are waiting for the 1 hour chart to fit in. Daily bullish, 4 hour bullish, 1 hour has to become bullish by itself. And the 1 hour becomes bullish right here. So what do we have? Triple bottom, bullish divergence on the last two waves, and a breakout. And here is our movement. Okay, guys, so once again, that's the roadmap you need to ask yourself. 3 time frames. Clear, 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 nothing against, validated, boom. That's where you can start apply your trades. That could be manual, that could be with any trading system or any other methods that you apply. But first of all, validate, right? If you cannot find the agreement of the 3 time frames, each of them showing something different, or any of them is in disagreement, wait. Your chances are increased dramatically when all of them lined up to the same direction. As simple as that. Well, not really as simple as that, but you got the idea, right? Okay. Questions as for now? Pound Canadian. Sure. Let's take a look, Pound Canadian. So Pound CAD, we are after cells because the daily has the divergence. Oh, sorry, daily does not have divergence. 4 hour should provide us the cell opportunity. Correct? Two waves or bearish hidden divergence or a range. Do we have two waves right now? Forming. It looks like forming. Correct? Do we have divergence there? It looks like forming. Do we have two candles rule inside? And in order to be able to answer that, this is what you are checking. 1, 2. Right? The last two candles giving you higher highs, higher lows. Broken, broken. Therefore, that could become to be a very nice sell set. In order for the 4-hour chart to be validated to waves, 1-hour chart must be a cycle by itself. Correct? The first leg on the 1-hour chart cannot be approved. No two candles rule in play. Already. No way to continue further. No, nothing technical to trade in such situation. So we're waiting for clearer setups. Okay, that's all. Once it becomes valid to waves, each of the cycles become validated by itself. You have the chance to trade. Our best plan here is get one more low, approximately around 164, 163, maybe slightly lower, and then switching highs. Do we have the reasons to sell yet? As we just saw, the answer is not yet. So there is a very good chance that the pair will continue to move in something like that. Very, very, very annoying back and forth moves. Okay? Once again, when it's not clear, try to avoid. Why? Because your chances to fall into something like that with these moves becomes much bigger. This is exactly the money flow. When you don't have the agreement from all the time frames, expect such unclear moves, which will make nothing but a headache. Okay? Asif? The questions to ask yourself very, very simple and correct. Do I have the setups to trade with the higher time frame direction? Is my setup valid? And do I have anything against me? That's the questions. Any of these answers is yes. Wait. Okay, so let me just check my list. So pound yen we discussed, Aussie Kiwi discussed, the dollar discussed as well. Okay, oh, euro yen, guys, euro yen. So here's the thing. Yesterday I explained why the 1-hour chart was not ready, right? And look what happens since this moment. So let me just go back here for a second. Okay, so we are for sell. For conservative, we need the trend line breakout. Do we have trend line breakout? No. So we have no conservative setups yet. Do we have any lower lows? No. So we can't trade anything conservative here. The whole idea here is more aggressive. So the last divergence from the daily is bearish. Sorry, here. Bearish. Hidden, bearish regular divergence. Last divergence on the 4-hour chart now looks like bearish as well, right? In order to be able to validate it, what do we need to ask ourselves? Do we have two candles rule on the last part? So my question for you, do we have the two candles rule here? Yes or no? Who can help me out here? Correct. The answer is no. We don't have any two candles rule in play. Therefore, this cannot be the two waves. Boom. Do we have these two waves possible in play? The answer is we have two candles rule here. 1, 2, broken. Do we have the divergence in play in that situation? Yes. 3 highs going down. So that's where it starts to be interesting, right? Then we go to the 1 hour chart. 1 hour chart must be a cycle by itself on each of the legs. So this was the first leg. That's the double cycle, right? And that's the second leg. And there must be divergence as well. So here comes the question. Do we have a divergence in that situation? Well, the histogram will confuse you. The answer is no on the histogram. On the moving averages, the answer is yes, right? And this is our place to start looking for the cells. Now we need to ask ourselves the question. So, okay, if that's the case, right, what am I looking to basically to trade? The first situation here is to make sure we go below the trend line with no signs against us. What is this? This is called how? Who can help me out here? On the breakout. Thank you very much. Bullish hidden divergence. So daily is bearish, 4 hour bearish, 1 hour bullish. Do we have the okay to go? Boom, exactly. Like the pound Aussie yesterday. Remember? Exactly the same, which we just saw a few minutes ago. That was the breakout, attempt to break out yesterday. And that was a bearish hidden divergence. No go. We want to improve our conditions. We want it to become bullish again. So we're waiting. If it becomes, boom, we have a trade. Euro pound didn't become. On the attempt to make a breakout, we have the bullish hidden divergence. Immediately falls down, right? So what can still validate it for us if that turns to be convergence, like making lower lows, and then we can start looking for ourselves, right? But at this time, it's bullish hidden, while 4 hour and daily are bearish. Can we work with that? The answer is no, we can't, or at least we shouldn't, because it's a sign against us. And we want the free go. When it's free, the road is free. All the time frames we work with lined up. That's where our chances are improved. That's exactly the place. Okay? That's the idea. All right, so now gold and silver. So gold basically so far following the idea. It's triple, so we expect a correction. That could be two waves, or that could fall to be a range. After that, I would expect one more high before we are dropping again into the sell zone. So far the plan is following. It's pretty much like the commodities pairs, like the Aussie dollar and the New Zealandian dollar. We can expect it to go parallel. So that's the idea for the gold indices. The German DAX had for us this double bottom bullish divergence. Therefore, we can expect a corrective cycle on the 4 hour chart. That could be two waves movement. Once the 4 hour chart turns to be two waves movement, we can start looking for the sells. So by ideal, that should make something like that. Why this cannot be the first movement? Because the first leg is stuck inside the two candles, right? These two candles. So the whole first leg here stuck inside. Can't use that. So the best scenario would be basically here to get 1, 2, and start looking for the continuation. Okay. Nasdaq so far sitting and forming some kind of triangle. And remember, we are only for short term because none of the daily lows is still making lower lows. So the whole idea here is the short term. If it managed to break down, we have our short term sell opportunity attempt until we will get the next bullish divergence. And there's a question about, which one was it? Dow Jones. Dow Jones, well, Dow Jones is basically doing for us what I don't love, situations I don't love. Why? Because it was a double wave correction. After double wave correction, chances are for continuation. So once again here, as S&P is basically the same. We don't have yet any false break coming after the divergence, any lower lows, any trendline breakouts. Too early from my point of view. The daily develops the divergence, 4-hour has no divergence at this stage. Therefore, I wouldn't rush into that. Let's see if no, just one high. So I wouldn't rush into that, to be honest. Stocks, we have our 3 stocks going. Where it disappeared? Here. Facebook, we are short selling. We have the Deutsche Bank, which we are long. And we have our Teva, which we are long as well, aiming the final destination at, let me just find it. Teva. The final destination for us, 28, 29. This boost, which we see in the last few days, is coming after approving one more new pill for them. So 28, 29 is our final destination. As per cryptos, the answer is we are still in nothing. The way it seems, the market is really waiting for new news from the ETFs, the new news from acknowledging the legitimacy of the market. It's still not there. It's still in discussion. It's still under pressure. As I said yesterday, we have 2 classical ones. The one that paid us was the ETP. That was a monster move and reached our 50% target of this triple. So game over for the ETP. And the one that starts to be on the list is the Ethereum versus the Bitcoin, which reached the level. Now we are waiting for the false break and the turnarounds. So that's the only one currently I have on the list. That's all from my side for the updates. If you have any questions, guys, it's your time. Oh, that's true, Ted. That's true. Time flies by. By the way, yeah, that's well, maybe you know that's an opportunity to say that, guys. For some of you, the dinosaurs of the club, the first year is about to finish. For some of you, it's already finished or about to be finished. You will get notifications from my team for renewals. So for all those of you who want to continue with us, you are welcome. Please follow up the instructions from the support team. That's basically all. And yes, time flies by. The price is $197 for the whole year, and we decide to keep it very, very low. As I said many times, the whole goal of the club, the live rooms and the reports, is to be able to give a fair opportunity to everyone who is ready to take this opportunity. We can easily make it very, very high in price, but we don't want to focus on people with ties and suits only. The idea is to be able to help the same guys like us, started from the very, very zero. Okay, so that's all. Surprisingly, I got like, I don't know, 5, 6 questions on the last 2 days. Vlad, why the price is so low? That surprised me, but well, the answer is the same. The answer is the same, guys. We want to give the fair chance for everyone. Not everyone can afford big numbers to pay for year or every single month, and that's not our goal here. So that's all. Okay, guys, thank you very much for being here. If there are no more questions, I wish you a wonderful day. I'll see you again tomorrow, and of course on Telegram groups. Keep in mind the FOMC tomorrow, so there is a chance the market will continue its slow motion until then. But slow motion still pays. We see the majors, we see some crosses that we've been following, right? So OZK, we found OZ, really nice opportunities. Thank you for being here. See you on Telegram and tomorrow. Bye for now.